Meta is down 12% after reporting earnings. I talked about the stock 2 weeks ago and I told you guys I could potentially be interested in buying it at $650 per share or below. And many people told me it's never gonna happen. You're just trying to time the market. But I told you guys I'm a disciplined individual and I don't like to overpay for stuff. Well, it's finally here. Meta got very close to $650 per share and I'm living up to the name. It's in my buy zone. It's looking very interesting, so I'm very excited to talk about Meta again and let you guys know my updated thoughts on the earnings report. And I believe Meta is kind of an amazing company with 3.5 billion daily active people, and it's trading at like 22 times forward earnings. It's really the cheapest of the big seven. So I want to talk about it again, and I really hope you enjoy it as always. Now, they had a massive beat on earnings per share, massive beat on revenues, and Meta continues to surprise me with the revenue growth. I mean, this is a company that's in the trillion kind of range and it's still growing revenues 26%. It's just mind blowing, guys. 26% revenue growth. Now, net income was a little bit shocking to many people. If you read the headlines, they had a massive miss on net income, but that was due to a one-time tax expense that they had to pay. And if it wasn't for that, net income, I believe, would have been 18.6 billion, which was also an increase quarter on quarter. And the company expect this kind of thing that they paid for the new, I believe, big beautiful bill is going to cause a significant reduction in its US taxes for the rest of 2025 and its future years. So I'm expecting a tax tailwind for Meta over the next few years, and it should be very beneficial for the company's bottom line. Looking at the company's daily active people, it continues to grow every single quarter. This is a stunning metric to me because 3.5 billion daily active people are in the Meta ecosystem. And imagine how valuable is that to be able to reach 3.5 billion people every single day. I mean, this should really be one of the most valuable companies in the world, if not the most valuable company in the world, because attention in this economy is everything, and being able to reach people, and 3.5 billion is absolutely insane. Now, for Meta, they're also expanding in other areas, and they have launched something called the Meta Ray-Ban glasses. I'm sure many of you guys have seen them for $800. Now, the product is sold out, and the demo slots have been booked all the way through the end of November. So far, this product has been a success, and this is Meta's first consumer-ready AI kind of product, and they plan to do more consumer AI-related stuff. And to me, it's a very interesting way to diversify the revenue away from just advertising in general. Expenses as a percentage of revenues, they continue to be disciplined with expenses, unlike 2022. But the only problem is, again, capital expenditures. It has been ballooning like never before, 50 billion versus 24 billion, more than 100% increase year on year. And Zuckerberg, he plans to take it further because he raised his capital expenditures to 70 to 72 billion from 66 to 72 billion. And this is why the stock is going down. There's a lot of fears around it because Meta is just spending a lot on CapEx, and they don't really have all the money to spend it on CapEx, which is why the company is raising at least $25 billion through a bond offering, which is going to go on for like 40 or 45 years. So most of it is like low interest rate debt for 40, 45 years. I'm not concerned about the debt itself, but those are massive, massive investments, and Wall Street and investors are not sure if those investments are going to pay off. And with Meta especially, they have a lot of recency bias from 2022 and 2023 when Meta was going all in on the metaverse, which I don't believe has played out too well, and maybe it's not going to play out too well. And Zuckerberg realized that he corrected course, and then the stock has gone up. And Wall Street and investors have the recency bias of the Metaverse 2.0, and I don't believe this is it. But Zuckerberg is spending a lot on CapEx, and the market is getting worried, and I believe the market deserves to be worried. Now, if we look at the company's PE ratio, it says it's trading at 23 times, but I did the calculations. It's trading at 22 times forward earnings based on today's price. Now, if you compare it to the other big seven stocks, which is very interesting to me, Meta is the cheapest at 23 times forward earnings. Then you have Google, guys. Google is at 29 times forward earnings. This is really unusual for Google. It used to trade at 22, 21, 23, and Meta used to trade at the same one. Amazon is trading at 33 times forward, Microsoft trading at 33 times forward, and Nvidia is trading at 35 times forward earnings. So the cheapest one out of all of them is Meta, and Meta is the one growing revenues at 23%, much faster than a lot of those companies, and they reach 3.5 billion people every single day. So to me, Meta is looking like a real bargain. It's looking really, really cheap. Now, the most exciting part about it all is this is a forward PE ratio. And this forward PE ratio is based on only 7% earnings per share growth in 2026. So the analysts are expecting Meta to only grow 7% in 2026. I'm just not sure how that's going to happen, guys. If they have the tariff tailwind, so I mean the tax tailwind, so if taxes will be a little bit lower for them in 2026, they can take advantage of a little bit more in depreciation as they're building all those data centers and all those physical assets. And now they're growing revenues around 20% a quarter in just revenues, and normally earnings per share grows a little bit faster than revenues. How are they going to grow earnings per share only 7%? And then this is what the 22 forward PE is based on. So if they grow maybe 10 or 15% like they grew this year, then now Meta would be trading around 18 or 19 times forward earnings. It would not be trading at 22 times forward earnings. So no matter how I look at it, really, Meta to me, you could say, look like a real bargain with 30% net income margin. It looks really, really good. Now, in terms of the sentiment in general, the sentiment is a little bit, you could say, bad about CapEx. And you never know when the tide turns, because now investors and Wall Street have been forgiving a lot of those companies on CapEx. Like whenever a lot of those companies, they spend a lot on CapEx, normally investors get worried and those stocks kind of sell off, because investors, they love when the company does buybacks. They love when the company does dividends. They don't have a long-term horizon. So Meta and a lot of those companies, they're investing for the long term. But Wall Street and investors, they care about the next quarter and the next year. So they want to know what they're doing right now. And if they don't see the results right now, those stocks can be unjustifiably punished. So for me personally, I believe Meta is presenting a buy at this price. It's finally a buy for me. I told you guys that when it was in the 750, you told me it's not possible. I think Meta is finally a buy for me at this price, but I would not be surprised if the sentiment changes around CapEx, if Meta goes maybe to $550 to maybe the low 500s, I would not be surprised at all. I'm not expecting another Metaverse 2.0 like what happened in 2023 and Meta went down 80%. I don't believe that's going to happen, but I believe there could be a sentiment change coming on those companies, massive spending on CapEx. And if Wall Street, they change their minds on that this is getting unsustainable, Meta could start selling off in a major way until they change course. And I think we could potentially see lower prices. So this is my opinion on Meta. I like it very much over here. And Meta and Amazon, they are my two favorite of the big seven. And that was my opinion on Meta. It was not financial advice. Hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I'll talk to you in another video.